Welcome everybody to the second lecture video of Chapter 4. Now today in this video, what we're going to be talking about is the various kinds of income statements that you're going to need to know how to prepare throughout this course. Now it's important before moving on that I just mention that if you haven't watched the first lecture video for Chapter 4, then I strongly suggest you go back and do so. Because we talk about a few main concepts that you're going to need to know, and you're going to have to build that foundation in order for you to comprehend this video. For instance, we talked about how to prepare a basic income statement and also the difference between operating expenses and non-operating expenses, difference between operating revenue and non-operating revenue. Okay? It's very important that you know these concepts, which I discussed in the first lecture video, in order for you to fully understand this one. Okay? So without further ado, let's look at the different kinds of income statements that you're going to need to know how to prepare. Fortunately, there's only two. There are two kinds that you're going to need to know and master. Okay? First one is called the single-step income statement. The second one is called the multi-step income statement. Alright? So let's take a little bit more of an in-depth look of each of these kinds of income statements. As you can see on the screen now, what we have here is our single-step income statement. Alright, and as you can see, it's not too bad, right? It's not bad at all. If anything, it looks very similar to the income statement that we prepared in lecture video 1, where we were recapping financial accounting, right? So it's not overly scary, it's not overly bad. It's actually very easy to learn, okay? Now there are a few differences from what we've seen in the first lecture video, and we'll go over that, but I just want to let you guys know that this is the simplest form of income statement that you'll be asked to prepare for this course. So let's take a look at how to prepare this statement. So the first step, of course, is to do your header. List your company name, the type of income statement, and the date, right? And then always after the header, the second step is to list out all your revenue accounts. Now, if we take a little bit of a flashback back to the first lecture video, what you'll see is that there are two steps that I mentioned that you need to know in order to prepare the revenue section. Okay, so the first step is to calculate your net sales, and the second one was to list the remainder of your revenue accounts. So we calculated net sales on that income statement by doing sales minus sales returns and allowances. Recall that net sales in fact equals sales minus sales returns and allowances minus sales discounts, right? We talked about that in the first lecture video, but of course when we made our basic income statement, we had no sales discounts. So it was just simply sales minus sales returns and allowances. But as you can see from the income statement that we prepared from the last video, we showed the work in the revenue section. We actually showed the sales account. We actually showed the deduction from the sales returns and allowances. But if we flash back and look at what the single-step income statement looks like, we can see here that we don't list the sales account and we don't list any deductions that happen to it. We just list net sales. We don't show any of that work. We just list net sales as it is, okay? And that's kind of the theme that you're going to see throughout this statement, is we try to show as little work as possible when preparing the single-step income statement, all right? So for the single step, you just list your net sales first, and then second step to complete the revenue section is to just list the remainder of your revenue accounts, right? So in this case, what we have here is a dividend income of $120, and then also a gain from the sale of a building of $270, right? Add all those up to figure out our total revenue of $13,390. So after completing the revenue section, we then move on to complete our expenses. So we just list out all of our expenses and add them up. So we got office salaries of $4,220, insurance expense of $1,230, interest expense of $500, and a loss from fire of $2,100. Add all these expenses up, and we get total expenses of $8,050. After that, we then calculate our net income before tax, which is just simply total revenues minus total expenses. You know, we've seen this before in lecture video 1. So $13,390 subtracted by $8,050 gives us our net income before tax of $5,340. Then, simply we just calculate our income tax expense. In this case, tax is 20%. We take 20% of $5,340, figure out that our income tax expense is $1,068. And finally, we calculate net income, which is net income before tax subtracted by our income tax expense, right? Figure out that our net income is $4,272. So as you can see, it's basically the exact same income statement as the one covered in lecture video 1. The only difference is that here in the single step income statement, we are not showing the work for net sales. So now that you understand the single step income statement, we're now going to go ahead and look at, the longer and more complicated multiple step income statement. So as you can see, the statement is a lot bigger and it looks a lot more intimidating as well. But I assure you, it's really not as hard as it looks, okay? There's only really a few differences between the single step and the multiple step income statement, okay? Now, before we go in and look at the individual steps required in order to complete this huge income statement, I just want you to notice this one big difference, okay? Take a good look at the statement here. What you will notice is that there's actually two places where we're recording our revenues, and there are two places where we're recording our expenses. Now, if you look on the statement here in more detail, right, you can see that, there's a revenue section, and in there is our sales and our sales returns and allowances. And then there's also this other revenues and gains section. And this has things like dividend income and gain on the sale of the building. So the revenue split up. Same thing with expenses. The expenses, we have a normal expense section up top here with office salaries and insurance expense. And then down below we have another one, other expenses and losses, which include a loss from fire and interest expense. Why are we doing this? Why not just lump them all together? And this is where lecture 1 is going to come into play here, okay? Remember in lecture 1 we talked about operating revenues and non-operating revenues and operating expenses and non-operating expenses, and how the multiple step income statement likes to separate the revenues and expenses based off of this? Well, this is exactly that, okay? What we do in the multiple step is we separate our revenues between operating and non-operating. The same thing with expenses. They are separated by operating and non-operating. So I suggest, if you didn't watch the first lecture video, to go back now and at least review that part, because it's crucial to understand the difference between operating and non-operating revenues and expenses in order to comprehend how this statement is formatted and presented. So what we do, the general idea, is we record all of our operating stuff up top and then our non-operating stuff at the bottom. Okay, so that first revenue section is operating revenue, and the first expense section is operating expenses. And then the second part, the second revenue section, is non-operating revenues, and the second expense section is non-operating expenses. Okay, so now let's just jump in and examine, step by step, how we can go about preparing this big statement. Okay, first step, as always, is just the header, right? Standard stuff here, company name, statement type, and the date. We already know what this is. It's getting drilled into our heads pretty quick here, I think. Second part, as always, is revenues. You always do your revenue section next, after your header, okay? Now remember what I said. Multiple step income statement separates revenues between operating and non-operating. And as I mentioned earlier, we always record our operating stuff first. Hence, in this section, we're just going to include our operating revenues, which in this section is only going to be our net sales. Now notice how on the multiple step statement here, we actually show the calculations to our net sales, unlike we did on the single step, all right? We actually show our sales account and our sales return and allowance account. Okay? And this is kind of the theme of the statement. The statement is a lot longer, right? It includes more details, more headers. And that's just the general theme, right? That it likes to show more details and show its work. So it only makes sense that it shows the calculation for net sales. Whereas the single step statement is designed to be very basic, raw, and show as little work as possible. Therefore, we don't show the work for net sales there. We just simply list it. However, on this statement, we actually calculate net sales right on the statement. So we include our sales account here of $18,500 and subtract our sales returns and allowances of $5,500 to arrive at our net sales of $13,000. Now, of course, remember, net sales is an operating revenue simply because it's, a kind of revenue that we incur on a day-to-day basis. The next step is going to be our expenses. But again, we separate our expenses between operating and non-operating, and operating is always listed first. So these would be our operating expenses. So our office salaries, something that, the business would incur on a day-to-day basis, and the same thing with insurance, right? So we just list our operating expenses. So $4,220 of office salaries and $1,230 of insurance expense. Add these together to arrive at total expenses of $5,450. The third step is to calculate our income from operating activities. Just simply take our revenues, which is our operating revenues, right? Subtract that by our expenses, aka our operating expenses, to arrive at our income or loss from operating activities. In this case, our operating revenues, right, as we calculated before, $13,000, subtracted by our operating expenses of $5,450 to get our income from operating activities of $7,550. The fourth step here is where we record our second revenue section, titled Other Revenues and Gains. So this is where we're going to include our non-operating revenues, which are revenues that, the business wouldn't incur on a day-to-day basis, right? Very unusual, rare revenues for the business to receive, right? Which would be dividends and a gain on the sale of a building. So dividend income is $120 and our gain of the sale of building is $270. Therefore, total other revenues and gains is just $390. After we report our non-operating revenues, we then record our non-operating expenses under the header of other expenses and losses. So these would be obscure expenses that, the business wouldn't incur on a day-to-day basis. In this case, a loss from fire and interest expense. We have a loss of fire of $2,100 and interest expense of $500, giving us a total other expenses and losses of $2,600. Similar to how we calculated our income from operating activities above, the next step is just to record our income or loss from our non-operating activities. So we just take our total non-operating revenues subtracted by our total non-operating expenses. So our total non-operating revenues, or you could call it total other revenues and gains, is $390 subtracted by our total other expenses and losses, gives us a loss from non-operating activities of $2,210. So the next step is to calculate our income tax expense. But of course, before that, what we always calculate beforehand is our net income before tax, which we calculate by taking our income or loss from our operating activities and add in our income or loss from our non-operating activities. In this case, we have income from operating activities of $7,550 and a loss from non-operating activities of $2,210. Add these two figures together, we arrive at $5,340 of net income before tax, right? And then to calculate our income tax expense, we just take our net income before tax and multiply that by the tax rate. Tax rate in this case is 20%, so 20% times by $5,340 is going to give us $1,068 worth of income tax expense. And then finally, we just calculate our net income, which is, as always, our net income before tax subtracted by our income tax expense. So, net income before tax, $5,340, subtracted by $1,068 worth of income tax expense is going to give us our net income of $4,272. And then you're done. Congratulations, you made it through the multiple step income statement. Okay? So, really not as scary as it initially looked, right? Didn't bite at all, didn't harm anyone, wasn't too bad, okay? If we take the multiple step income statement and compare it side by side with the single step, you're just going to notice that there's really only two main differences between these statements. The first one is net sales, right? Notice how on single step, we don't show the calculation for net sales because single step is a more basic, kind of method to prepare the income statement where you don't show details, whereas the multiple step is more detailed. Therefore, it shows the calculation of net sales and includes accounts such as sales and sales returns and allowances, right? So that's one little difference between the two statements here. And the second one is that it just splits up the revenues between operating and non-operating, and it splits up the expenses between operating and non-operating. But honestly, that's it. Those are the only two differences. And as you can see, they arrive at the same net income. The only differences are just the presentation of the material. Now, unfortunately, with the multiple step income statement being the more longer and complicated one, it tends to be the one that they're gonna test you on the most, or at least try to. So, it just seems to be the way it is with this course. They always like to ask you the harder questions, the more complicated ones. You can never catch a break with this class, honestly. So, my exam tip for you is to become very familiar with this multiple step income statement because you'll see it on the exam undoubtedly, okay? So now that you have a basic understanding of how to prepare both the single step and the multiple step income statement, I want to revisit how to prepare them, but when we add in cost of goods sold. Now, you may remember this term from financial accounting. It is a very annoying expense that could be quite tricky for a lot of students. Okay, so before we go and actually look at how it's presented in the income statement, I kind of want to do just a little bit of a recap here of what cost of goods sold actually is and how it's calculated, because it is a little bit tricky and it is a very annoying account. Okay, so what is cost of goods sold? Cost of goods sold is exactly what it sounds like, right? It is simply just represents the cost of all the goods that your company has sold during that year. Okay, very straightforward. So as you can tell, it's a cost. Therefore, it is an expense account. Okay, so how is it calculated? Well, cost of goods sold equals cost of goods available for sale, right? Which is basically the cost of all the goods that we could have sold during the year, subtracted by our ending inventory. And if we think about it, this equation actually makes a little bit of sense here, right? So the cost of the goods that our company has sold during the year makes sense that it's going to equal to the cost of all the goods that we could have sold during the year, subtracted by the cost that we just didn't sell, right? That formula makes sense. Unfortunately, there's a little bit more to it, okay? They're usually not going to give you cost of goods available for sale. You're most likely going to have to calculate it. All right, so how do you calculate it? Well, your cost of goods available for sale is equal to beginning inventory plus net purchases. And again, this calculation makes sense. The cost of the goods that our company could have sold during the year is going to be equal to, whatever inventory we started with, our beginning inventory, plus by any extra inventory we added on, which is our net purchases. So again, this formula makes a little bit of sense if you think about it. But of course, there's a little bit more beyond that, and that is to calculate net purchases. Sometimes they're not always going to give you net purchases, and you're going to have to figure that out for yourself as well. Luckily, net purchases is basically the same thing as calculating net sales. You know how net sales equals sales minus sales returns and allowances minus sales discounts? Well, net purchases is just simply equal to purchases minus purchase returns and allowances minus by purchase discounts. Okay, so very similar formula there, right? And these are basically the three formulas you're going to need to know in order to, master the cost of goods sold and how it's, calculated and then presented on the income statement, okay? If you know these calculations, not only just like have them memorized, but actually understand, why the calculations are the way they are, you're going to do very well at preparing the cost of goods sold section on the midterm exam, okay? So now that we know how to calculate cost of goods sold, let's look at how it's presented on the income statement, okay? Now first, let's look at what it looks like on the single step income statement. All right, so this is what it looks like right here on the screen. And as you can see, really not much has changed at all, right? In fact, all we've done is added one extra line. We just added our cost of goods sold account underneath the expense section for $3,456. And that makes perfect logical sense, right? Obviously, cost of goods sold is an expense, so we just list it underneath the expense section on the income statement. We don't show any of the calculations for it, so this is pretty straightforward. Nothing really changes for the single step. However, now let's look at how cost of goods sold looks like on the multiple step income statement. So as you can see, a huge difference, absolutely huge difference in terms of how it's presented on the multiple step income statement. So the first thing you're going to notice is that it even has its own section, right? It's not listed underneath expenses here. It's actually listed by itself, right underneath the first revenue section where we report our operating revenues, okay? So that's the first major difference. The second one here is that we don't record it at its huge lump sum of $3,456. We actually show all the calculations leading up to that on the income statement, right? If we take a look back at the single step one, there are no calculations there. It just simply lists $3,456. However, going back to the multiple step here, we actually show all the calculations. Now, does this sound familiar to you? Well, remember net sales? Net sales on the single step, we don't show any calculations for. However, on the multiple step, we do show the calculations. Okay? So this is just the general theme of the statement, like I mentioned. Multiple step is more detailed, so it's always showing those background calculations right on the statement, okay? Which is why it's a huge pain in the butt to prepare, but of course, they're always going to ask you on it. So you got to know how to do it, you got to know how to organize it, and how to present it, okay? So let's take a look at this. So in order to, calculate its cost of goods sold, it first starts off by listing our beginning inventory of $3,700, and then we proceed to calculate our net purchases, which, recall, is purchases minus purchase returns and allowances minus purchase discounts. In this case, there seems to be no discounts. However, we have purchases and purchase returns. Therefore, our net purchases is just $450 subtracted by $213, giving us net purchases of $237. The next step is to just calculate our cost of goods available for sale, which is beginning inventory plus net purchases. So we just take our beginning inventory, $3,700, add our net purchases of $237 to get our cost of goods available for sale of $3,937. Last step here is just to finish off the cost of goods sold calculation by taking our cost of goods available for sale and subtracting our ending inventory. So we take $3,937 and subtract $481 to get our cost of goods sold of $3,456. So as you can see, in order to successfully prepare this cost of goods sold section on the multiple step income statement, you're going to need to know those three equations we talked about earlier in order to calculate cost of goods sold, right? The one for cost of goods sold, the one for cost of goods available for sale, and the one for net purchases, right? You're going to really need to know those because you use them, as you can see here, in order to format and present the cost of goods sold section appropriately. There is also one other difference between the single-step income statement with cost of goods sold and the multiple-step income statement with cost of goods sold. You may have seen it, you may have not, but if you look closely here, there's another term that you may not be familiar with, and that is gross profit. Okay? Whenever we report cost of goods sold on the multiple-step income statement, we calculate this thing called gross profit. Gross profit simply equals your net sales subtracted by cost of goods sold. Okay? We just like to include it on the multiple step income statement when we have cost of goods sold. Don't ask me why. It's just something that they like to put there. Okay? So just to recap really quickly, the differences of cost of goods sold on the single step and the multiple step. On the single step, you show no calculations. You just simply list it underneath the expense section. However, on the multiple step, cost of goods sold actually has its own separate, header and section, and within that section, you use all three equations in order to calculate and present your cost of goods sold amount, right? And not only that, but you also like to show your gross profit calculations on the multiple step income statement as well. And you record gross profit right after cost of goods sold, which again equals net sales minus cost of goods sold. Okay? If you know that, you're going to be golden in preparing cost of goods sold on the midterm exam. Okay? Now, before we go ahead and wrap up this second lecture video, just want to, talk about the different ways that you can format your expense section within, either the single step or the multiple step income statement. Now, revenues, you don't really get a choice between how you can format them. However, with expenses, there are two options. You can either format them by either nature or by function. Okay? So, formatting expenses by nature looks something like this. So, as the name suggests, we simply, list expenses by the nature of what it is, right? So, all the salaries are going to be reported into one account. In this case, we have an office salaries account of $3,500, right? And again, same thing with our depreciation. All our depreciation is going to be recorded and listed in one account. In this case, it amounts to $4,600. And same thing for our advertising expense of $1,100 and our insurance expense of $250. We just simply are listing our expenses by the nature of what they are. However, organizing expenses by function is a little bit differently. This is what it looks like when we organize the expense section by function. As you can see here, we have separated the expense section into two parts based on the company's function. So we've based this off of the company's selling function and the administrative function. And as you can see, rather than just having, one salaries account, we've actually split up the salaries between, the business's separate functions. We now have two salaries accounts, one pertaining to the selling division, amounting to $2,000, and one pertaining to the admin division, amounting to $1,500. Same thing for depreciation. We no longer have just one depreciation account reported by nature, right? Now we have two depreciation accounts. Again, one pertaining to the selling division, amounting to $1,400, and one pertaining to the admin division, or the admin function, pertaining to $3,200. Advertising expenses, however, we still have one account because advertising only related, in this case, to the selling function. We didn't use advertising over in the admin division. We use advertising to sell our product. So we're only going to report that under the selling function area of our expense section. So therefore, in that area, we have advertising expenses listed at $1,100. And our insurance expense, we only incurred insurance on the admin side. Therefore, that's only going to be reported on the admin function section of the expense section. Therefore, we have insurance expense there listed at $250. So as you can see, there's, a little bit of a difference between formatting expenses by nature and formatting expenses by function. But it is very important that you understand this difference and, know how to prepare income statements using both methods, because it's going to come up on the midterm. Questions sometimes specify how they want the expense section formatted. So I suggest you look at this and practice it a little bit and just become familiar with the terminology so that, if on the midterm it asks you to organize expenses by nature, you know what that means, right? It's very important. And with that, this concludes the second lecture video. Okay, so hopefully now you have a good understanding of how to prepare the various kinds of income statements, how to format the expense section a little bit differently. And in the third video, we'll go on to talk about a brand new section of the income statement that you would not have seen in financial accounting called discontinued operations. So hope this video has helped you out and hope to see you at the next one. Thank you.